Hey fellow investors and fellow stock guardians. It's Wednesday, January 13th, 2021. I'm Hoda, co-founder and CEO of StockCard, and here's a recap of today's noteworthy movements in the market. The stock market indices had a volatile day and didn't agree on the direction by the end of the day. The Dow finished in the red and the other two indices ended the day in the green, but only barely. Yesterday, we talked about the consumer price index report that came out on Wednesday morning. It seems worries about inflation wasn't justified, and aside from a 1.6% increase in gasoline prices, the underlying inflation remained tame, which is the good news for the stock market. An interesting company popped up on today's winners on the StockCard's Discover page. Shares of Virgin Galactic were up by more than 11% on Wednesday. The space tourism company had taken a beating recently after it had to skip one of its test flights due to technical challenges. On Wednesday, however, the gods of the stock market turned their attention to this stock once again, or to be exact, the queen of the stock market turned her attention to the space exploration industry. Who am I talking about? Of course, Cathie Wood, Chief Investment Officer of ARK Invest, who today announced her company is introducing a new ETF focused on space exploration, and investors celebrated the news by picking up shares of Virgin Galactic. I'm already a stock owner and have a few shares of Space Galactic as a part of my windmill portfolio. I added this after the last time that the stock fell off the cliff, so I'm happy to see the price jump. Shares of Advanced Micro Devices, ticker AMD, were down by almost 4% on Wednesday. This chip maker shared some good news that it is introducing a new class of mobile processors. However, the news from its rival, Intel, is most likely the main reason behind the stock price decline. Intel announced it is replacing its CEO, and it seems investors are taking the news as an indicator that Intel can focus on taking back some of its lost market share. The stock market never stops surprising me. Today's surprise came courtesy of Dropbox. On the surface, everything looked fine. The stock price was doing relatively okay, and in the work from home trend and era, and with the ever-growing demand to access and manage important documents digitally, this stock should have been growing rapidly. However, the news broke and it is laying off 11% of its workforce. The CEO discussed the company's virtual first policy and the fact that the company doesn't need many of its current workforce who were needed in physical work environment but not needed in the new work from home world order. The immediate implication is for the company's stock price, which fell by more than 6% on Wednesday, but the broader implication is what matters the most here. This is perhaps the first of many similar press releases through which tech-savvy companies give up their office spaces and cut down the overhead to run lean operations. The even broader implication is on the office real estate stocks and REITs. The COVID-19 pandemic may have triggered a much larger change in how we work and live, and Dropbox announcement could be the sign of such change. Something to watch, especially if you own commercial real estate or office real estate stocks and REITs. By the way, if you don't know the list of commercial and office real estate REITs, you can find them by typing REIT in the search bar on StockCard's website and see the full list of a variety of REITs. Clicking on any of those would result into a list of stocks in that specific category. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.